In this next lesson, we're going to take a look at the product or the inventory valuation method within X3. This valuation method, it is one of the primary things in the system that governs the costing behavior for all your products. So what we're going to see here in terms of the valuation method, let's come under our setup menu, then let's go down to stock, then into valuation methods. So the system, it comes set up with some standard valuation methods from which you can choose, and of course you can go through like with most things in X3 and fine-tune these. But so in here we have an average lot costing method. So this would be appropriate for organization, some organizations that do batch control. If one wanted to keep a track, from an accounting perspective of your inventory on a batch by batch basis, the average lot could be a good candidate for you. There's an average unit cost method, which is more of a global average that the system keeps for all inventory that you have on hand of the product. We have a FIFO basis and a LIFO basis, so X3 keeps track of these, a variety of different receipt tiers, and your accounting can be driven off of that. Then finally, we have a couple different standard costing methods, whether it be a revised standard or just the prototypical standard cost. Okay, so when we take a look at these valuation methods, let's take a look at, say, the FIFO one here. Where we're going to want to start our review is in here for the method 1 assignment, and we're going to go ahead and click on this magnifying glass to see the particulars of the setup. So let's start off here in this valuation section. This valuation setting right here, so for the FIFO valuation method, this is going to be set obviously to the FIFO cost, but you can see the different options that you have herein. This valuation setting here is going to govern whenever inventory is issued from the system, whether that be in the form of a shipment, a issuing of raw material to a work order, or say like a miscellaneous issue. Any of those forms of inventory, decrements, that inventory is going to be issued out of the system at the current FIFO tier. Okay. Now, alternatively, down here, you also have this receipt value that's assigned to this valuation method. So this is saying that when inventory is being brought into the system, and again, this could be in the form of a purchase order receipt, it could be in the form of a work order receipt or a miscellaneous receipt. That inventory inflow, the increment of the inventory, is going to be brought in at whatever order cost you have set, whether that be a PO cost in the context of a raw material or a work order cost in the context of a semi-finished or finished good. Okay. Over here in this count section, these settings right here are going to be used in conjunction when you're utilizing the formal inventory or cycle counting tools within X3. So, we have settings here, say if the counted inventory is less than what the theoretical X3 inventory was, or vice versa. This is going to govern how those new tiers will be incremented or decremented there. Okay. Another important thing to note, under each one of these methods here, we also see that there's an alternative default setting. So this is saying that in the event that you don't have a primary reference cost, you can use this alternative cost. So, give you a case in point here in the context of the receipt value. So let's say we're doing a miscellaneous receipt of inventory, and we don't specify, or maybe the warehouse personnel who's performing the miscellaneous receipt doesn't know what the inventory should be valued at. So they just go ahead and leave the price field blank on the miscellaneous receipt. Well, X3 is going to come down here and check to see if there's a standard cost assigned to this product, then go ahead and use that standard cost for the valuation. Okay. Next here, we have a standard rule section here. This adjustment of receipt prices setting, That's used in context of truing up your inventory valuation to the finalized cost. So say again, in the context of raw material, we issue out a purchase order to a supplier, and we bring that on that purchase order. We say that this product is valued at $100. When we initially perform that purchase order receipt, that inventory will be brought in for $100. But then, let's say we subsequently get an invoice, and for whatever that reason, that invoice is not valued at $100, but rather $105. Well, if we have this setting checked, then X3 will seek to update the value of your inventory to that $105 value. Okay. Next setting over here for null cost being allowed. So this is saying, can we have a $0 inventory movement for the product? So many organizations will want to, oftentimes they'll go ahead and leave that setting turned off unless they otherwise have a convincing reason. Maybe you have consigned inventory that you need to transact in your system at a $0 value. So that might be a reason for which you want to have that box checked. Okay. Then finally down here we have this section here for receipt valuation exceptions. So what this kind of give you a case in point here, I could come under my movement type, and let's say here when I'm doing like a miscellaneous receipt, you know what, I don't want to bring the good in at the order cost, but rather I'm interested in just referencing whatever the current average unit cost is for the product and using that as my valuation method for a miscellaneous receipt. Okay. So again, another helpful tool that we have on the valuation method. Okay, so let's go ahead and close out of here. Other thing to take note of here in the method section here, if we click this second method box, what this will allow for is it'll allow for on our stock movement records, we can keep track of our inventory on a secondary method. So in this case, my primary method, I want to keep track of it on a FIFO basis, but maybe down here in the secondary method, in my stock movement records, I also want to keep track of it on a cumulative AUC basis. Okay, so by virtue of that setting, X3 will allow for that. Okay. Down at the bottom here, internal transaction value. So this is if we want our movements within the warehouse to be valued through our stock journal movements. We can go ahead and set that. So whenever, say, we do a location change, if we wanted valuation records written for that. Then we also have this adjustment of issue prices setting here that we can utilize, which would allow for us to revalue our our inventory issues from the system based upon a finalized cost of the product. Finally, in here on the valuation method, we have this margin section here. So in here, this margin section pertains to how the what I'll refer to as the frozen cost are written to your sales records. So that is to say, if I went in and I took a look at a sales order or a sales delivery or a sales invoice, what you'll see when we go to the line of those elements is that there's going to be a cost price written there, and that's what this margin section here governs. So let's go ahead and take a moment and tunnel over there and look at that. So we'll go ahead and close page out of here. Then we'll come down under our sales, then orders and orders. Here on the sales order, we can come over to our lines tab, and I'm going to come in and put it in the pop-up view. So in here on the pop-up view, we'll see here that for this particular line, The per unit selling price is $141, and here the cost price is $99.13. So that margin basis from the product valuation method is going to govern how this cost price is written here onto our sales record. Okay. So one final thing for us to take a look at as it relates to the valuation method is just is its assignment onto our product records. So here under our common data menu, let's come over to our product sites. Then in here on the product site record over in our cost section, here's where you go ahead and assign the valuation method. Okay, more often or not, at most organizations, whatever valuation method that they want to go with, I usually see that assigned across all products. Certain exceptions might be, is we talked a little bit earlier about consignment inventory. So if you have certain products that always are transacted on a consignment basis, you might want to set up a special valuation method for those consigned goods that allow null cost movements, whereby all the other products in your inventory, you'll have a common basis for the valuation, whether that be FIFO, average unit, standard costing, and so forth. Okay. One other important thing to take note of that kind of works part and parcel with this valuation method is when you're doing your month-end inventory and you're going through the exercise of reconciling your books versus the perpetual inventory report, make sure here under the stock, under periodic processing, we have the stock valuation report. So in this valuation report, you'll note here that we have a costing mode. So just a word of advice, whatever valuation method you have assigned to your products, make sure that when you're running the stock valuation report, you'll come in here and choose that. So again, if we're doing average unit costing, it would be the moving average price that I would choose in this utility. So that's it for this lesson. Please tune in for future lessons. The next one in this cost accounting series that we're going to be discussing is the costing dimension. Thanks a lot.